The national debt crossed above $30 trillion in January, and just a handful of months later, it already moved above $31 trillion. While high inflation and concerns about a deep recession dominate the headlines, this often gets ignored. One Loyola Marymount economics professor recently put the national debt's stunning rate of growth in perspective. It took this nation 200 years to pile up its first $1 trillion in national debt, and since the health crisis, we have been adding at a rate of $1 trillion nearly every quarter. According to the Committee for a Responsible Federal Budget, President Biden will be responsible for expanding the deficit by nearly $5 trillion between 2021 and 2031. But unrestrained spending is not the only reason for the debt rising. It's also rising because of the cost associated with servicing the massive obligation. The Federal Reserve is raising interest rates by leaps and bounds in an effort to contain soaring prices. As they do, the cost of the national debt surges even higher, placing an even bigger question mark after the nation's fiscal outlook. In May, the Congressional Budget Office projected that interest on the debt in fiscal year 2023 would cost $442 billion. But that projection was made before the Fed began regularly hiking rates 75 basis points at a time. Analysis by Alan Sloan of The Washington Post and Mark Goldwine of the Committee for a Responsible Federal Budget says interest on the debt in 2023 will no longer cost $442 billion, but $580 billion instead. As this steady diet of extra-large rate increases continues, we can expect significant revisions to longer-term debt projections as well. According to the CBO's May forecast, 40% of all federal revenues would have to be allocated to paying the interest on the debt by year 2052. But a stricter interest rate environment means that figure could get a lot bigger, and the date of the impact could arrive a lot sooner. Economist Peter Schiff is famous for predicting the 2008 financial crisis. Here's what he had to say just the other day about the future impact of interest costs on the debt. At the rate the national debt and interest rates are rising, before the decade ends, interest on the national debt will exceed 100% of federal tax revenue. If investors in our debt lose confidence in the nation's ability to meet its obligations, it's almost a certainty that the value of Treasury securities and the dollar will plummet. The CBO notes that institutions holding large quantities of government securities like pension funds, mutual funds, and banks could suffer losses big enough to cause some of them to fail. Financial contagion on a global scale would likely result. With all the attention paid to inflation and possible recession right now, it's easy for retirement savers to ignore the national debt. That's a grave mistake, in my opinion. The debt is racing higher and becoming more expensive with each passing day. As it does, the risks posed by the enormous burden are simply too great to ignore.